exploring unknown tech, decoding future unicorns. Welcome to Product X, where we use capital's sharp instincts and an engineer's hard logic to catch the next big thing in global tech. I'm Rena.
Hi, everyone. I'm Vivian Liu, a veteran angel investor at Pre-Angel Fund, focused on deep tech and frontier infrastructure.
Hey, I'm Nolan, former Silicon Valley top-tier architect, now digging into quantum computing architecture and software frameworks.
So here's the wild number. Quantinuum just listed on NASDAQ with a $15.7 billion valuation. But get this. They're projecting under $31 million in 2025 revenue and losses, approaching $200 million. How does Wall Street justify that? Vivian, let's start with you.
Honestly, you can't look at this through a normal PE lens. What the market is pricing in is essentially an option on the next industrial revolution. When you look at their shareholder roster, Honeywell, NVIDIA, JP Morgan, Amgen, these aren't just dumping money in. They're buying a seat at the table for what computing power looks like 10 years from now. It's strategic infrastructure, not growth equity.
Right, and that's exactly the gamble. But let me add something from the technical side. The reason these giants are willing to play is because Quantinuum's trapped ion approach actually has a real shot at meaningful computational advantage. The fidelity rates on their H series are something else. We've seen comparable hardware from other players, and the error rates are just nowhere near where they need to be for practical use.
So, the tech runway is there, but it's still a huge gamble. Nolan, can you break down what makes trapped ion different from, say, what IBM is doing with superconductors?
Sure. So the core difference is how you actually hold and manipulate the qubits. Superconducting is like printing chips. You can scale up the number of qubits fast, but they're incredibly fragile and noisy. Trapped ion uses electromagnetic fields to suspend individual atoms in a vacuum and laser controls their quantum states. The stability is dramatically better, which means higher fidelity operations. The trade-off? Scaling is brutally hard. Getting hundreds or thousands of ions perfectly controlled in an array is an engineering nightmare compared to just adding more superconducting circuits.
Let me jump in here because that trade-off is exactly what the market is betting on. The capital players know that early qubit count doesn't win the marathon. It's about having usable, reliable qubits that can actually run meaningful algorithms. If trapped ion can crack the scaling problem while maintaining that fidelity advantage, the valuation starts making a lot more sense.
That's fair. And honestly, that's why their TKET software framework is such a big deal. It's not just about their hardware. They've built a quantum software ecosystem that lets developers write code once and run it across different hardware architectures. That kind of interoperability is rare in quantum and creates a massive moat, even if another technology wins on the hardware side.
So we're looking at both a hardware play and a software ecosystem play. Vivian, from your vantage point, what's the investment thesis here? What's the timeline for actual commercial returns?
Here's the brutal truth. We're probably 3 to 5 years away from any killer commercial app. Right now, global quantum companies are mostly living off government and enterprise R&D contracts. The real money, the billion-dollar opportunities, come when someone can demonstrate a practical advantage in areas like financial modeling or drug discovery that actually beats classical supercomputers. That's the inflection point. The question is whether Quantinuum gets there first or whether someone like IBM or Google with their superconducting approach cracks it faster.
I think the wild card is quantum error correction. That's the make-or-break technical milestone. Until you can reliably correct errors and maintain stable logical qubits over extended computations, you're stuck in the NISQ era. Noisy intermediate-scale quantum, which basically means useful for some specific optimization problems, but nowhere near general-purpose computing. The team at Quantinuum has been making progress, but it's still a massive technical challenge.
Okay, let's shift gears a bit. You both mentioned the shareholder strategy. Vivian, who else is in this ecosystem and why does that matter?
Beyond what I already mentioned, You've got Fidelity on the financial side, which signals they're interested in quantum for algorithmic trading and risk modeling. Amgen is there for molecular simulation. The way I read it, this is a coordinated bet across multiple industries that quantum advantage is coming, and they want early access to the technology and the talent. When you see that kind of cross-industry alignment, it reduces the risk profile significantly, even if the underlying tech is still speculative.
And from a talent perspective, that's huge. These companies bring not just capital, but real use cases and R&D partnerships. It's the difference between building in a vacuum versus building with actual feedback from potential customers. That accelerates the path to commercialization dramatically.
Absolutely. Now let's do a quick lightning round. First question. Biggest surprise in this IPO?
The valuation itself. Even with the strategic shareholders, $15.7 billion for a company losing $200 million a year is a bold bet.
The size of the raise. $1.68 billion is enormous for a company at this stage.
What's the biggest risk factor?
Scaling. The physics of trapped ion is unforgiving.
Commercialization timeline. 3 to 5 years is a long time in tech.
Most underrated aspect of Quantinuum's story?
The TKET framework. People focus on hardware, but the software moat might be more important long term.
Exactly. It's their secret weapon.
If you could ask the CEO one question, what would it be?
What's your actual timeline to revenue growth that outpaces your burn rate?
How many logical qubits can you realistically hit in the next 24 months?
Vivian, give us a one-sentence summary of what we've unpacked today.
Quantinuum's IPO is a $15.7 billion bet that trapped ion quantum computing will cross the NISQ threshold into real commercial advantage within the next few years, backed by an all-star coalition of strategic giants who can't afford to miss the next computing revolution.
Nolan.
The tech is real, the fidelity advantage is real, but the scaling challenge is the biggest hurdle the industry faces. Whether trapped ion or any other approach, whoever cracks quantum error correction and scalable qubits first wins the whole game.
That's the perfect ending. Through Vivian's deep dive on the capital logic and Nolan's breakdown of the trapped ion architecture, we see this IPO is really a public chongfengha, a bugle call for quantum computing to step out of the lab and into the real world. Tech evolution has no smooth path, but that's exactly why we watch. Thanks for joining us, everyone. Hit like, subscribe, and we'll see you tomorrow.